Hey everyone, welcome back to Solo Mega Machine, the place where we talk all things finance, cryptocurrency, and investment opportunities you don't want to miss. If you're new here, make sure you hit that subscribe button because today's discussion is one of the most important XRP updates you'll see this year. Trust me, what's happening with XRP right now could be a moment in financial history that future investors will look back on and say, I wish I got in early. Today, we just received some mind-blowing official news about XRP. And when I say mind-blowing, I really mean it. XRP has officially been given the green light, and this could signal the start of a major shift in global finance. The kind of shift where ordinary investors who understand what's happening could potentially see life-changing gains. This isn't hype. It's about understanding the foundations being built behind the scenes. And yes, we'll also touch on a personal story that highlights exactly why early positioning is so crucial. Now, before we dive in, let's engage a little. If you're as excited about Ripple and XRP as I am, type next in the comments below. Smash that like button and make sure you're ready for a deep dive into one of the most pivotal moments in crypto. Today, XRP is popping around 8%. And this movement is just the beginning of what I believe could be an extraordinary upward trend. Here's why this is so significant. Ripple has officially partnered with MasterCard to introduce RLUSD credit card settlements on the XRP ledger. For those who might not know, this is huge. When a global payment giant like MasterCard adopts blockchain technology for settlements, it's more than just a partnership. It's a clear signal to the rest of the financial world. Institutions everywhere start paying attention because it confirms that blockchain isn't just the future, it's already here. XRP is literally sitting at the center of this real-time transformation. And it doesn't stop there. Ripple is also working with WebBank, Gemini, and other major players in global finance. These aren't small companies. They are central to how money moves internationally. When these firms start integrating with Ripple and the XRP ledger, it shows a clear path of adoption unfolding. It's the type of infrastructure setup that, when done strategically, can create generational wealth for early investors who pay attention. Think about it like this. Every transaction moving through these systems relies on XRP behind the scenes. As more partnerships and infrastructure layers are built, you're literally watching the financial rails of the world being rebuilt in front of your eyes. For everyday investors who understand this early, the potential upside is life-changing. It's not just a price spike or a trend, it's a shift in how global finance operates. Let me also mention something about timing. Most people see XRP's current price and assume the opportunity has passed. That's exactly the misconception that makes early positioning so powerful. This is the quiet before the storm, the calm before mass adoption. Those who recognize the signals now will be in the right position before the majority even notices. Finally, I want to share a quick personal insight. Right after high school, I met with an investment advisor who told me about Google before its IPO. At the time, I thought the opportunity had passed, but over the next 20 years, Google became one of the greatest wealth machines in modern investing. That lesson stuck with me. Real opportunities often look quiet at first with steady, undeniable momentum that most people overlook until it's too late. And what's happening with XRP today carries the exact same signature. So buckle up because in this video we're going to cover the full story from official partnerships and massive institutional investment to ETF momentum and why XRP is uniquely positioned for a historic move. If you pay attention, this could be your moment to understand what the top 1% already see unfolding in front of everyone's eyes. Now, let's dive deeper into what's happening behind the scenes with XRP and why it's creating such a unique opportunity. One of the most critical pieces of news is the $500 million strategic investment in Ripple led by Fortress and Citadel Securities, valuing the company at $40 billion. This isn't just a random headline, it's a signal that major financial players are taking XRP seriously. Fortress and Citadel are embedded deep in global finance. They don't place multi-million-dollar bets unless they see a clear path for massive institutional dominance. This level of validation is rare and powerful. When big firms like these invest, it shows confidence not only in Ripple's technology, but in the broader adoption of XRP as a global financial asset, it indicates that the infrastructure Ripple has been building is about to be fully utilized. We're not talking about speculative hype here. We're talking about real money moving through real systems that could transform how financial transactions are processed worldwide. Ripple's expansion into areas like prime brokerage, custody services, stablecoins, and corporate treasury solutions is another huge signal. These are services that directly cater to institutional clients, enabling them to interact with digital assets at scale. Hedge funds, asset managers, and global financial institutions now have the tools to enter crypto markets with efficiency and speed they never had before. This infrastructure is why experts like Michael Arrington have called Ripple Prime one of the biggest developments in digital finance. Hedge funds aren't experimenting. They're strategically positioning themselves to take advantage of these systems. And it's not just about private investments. XRP is seeing momentum in the ETF space too. For example, Franklin Templeton's amendment filing is a clear indicator that institutional adoption is nearing regulatory alignment. These firms don't file amendments blindly. They act when they understand the liquidity demand and see a clear path to compliance. ETFs are a vehicle for sustained, predictable inflows of institutional capital, opening the door for pension funds, insurance companies, family offices, and banks to enter XRP markets safely and efficiently. So, what does all this mean for everyday investors? It's simple. XRP is transitioning from being a speculative asset to a utility-driven, institutionally supported digital currency. Unlike other cryptocurrencies that rely primarily on retail excitement, XRP is becoming an asset with real-world use. Every new partnership, whether it's with MasterCard, Gemini, or global financial institutions, strengthens the backbone of the XRP ledger. These partnerships build confidence, enhance liquidity, and signal that the adoption of XRP isn't a trend. It's a structured evolution in finance. And here's the really interesting part. Timing matters. Most people see the price of XRP and assume the opportunity is gone. But in reality, the market is still in the setup phase. The infrastructure is being laid quietly, partnerships are being formalized, and institutional tools are being deployed. Once these systems are active and capital starts flowing in large quantities, the market will react fast. Those who position themselves early understanding the signals will have a significant advantage over latecomers. Let's take the MasterCard integration as an example. This partnership introduces RLUSD credit card settlements on the XRP ledger. Millions of potential transactions could move through the system, and each transaction relies on XRP as the settlement asset. This isn't theoretical, it's real-world utility. And while many retail investors are still watching charts, institutional players are already using these systems strategically to optimize efficiency, liquidity, and speed. Another factor that's accelerating XRP's adoption is the global macro environment. Financial systems worldwide are being pushed toward instant settlement, transparency, and digitization. Corporations, banks, and governments are actively seeking faster, more reliable payment rails. Traditional systems are too slow, too fragmented, and too costly. XRP fits perfectly into this gap because it can handle cross-border payments, high-volume settlements, and integration with existing banking infrastructure. It's already proven itself in real-world scenarios, which is why institutions are moving now before mainstream adoption drives up prices dramatically. In short, XRP isn't just a cryptocurrency. It's becoming a critical financial infrastructure asset. Its integration with major global players backed by strategic investments, ETF filings, and institutional tools signals a shift that could define the next wave of financial technology. Early positioning isn't just about catching a price spike. It's about recognizing the foundation being built and preparing to benefit from it when real-world adoption accelerates. Now that we've covered institutional investments and strategic partnerships, let's talk about another critical factor shaping XRP's future: ETF momentum and real-world adoption. ETFs, or exchange-traded funds, are not just financial products. They're gateways for large-scale institutional capital. When firms like Franklin Templeton file amendments for XRPFS, it's a clear signal that regulatory alignment is near and institutional money is preparing to flow in. ETFs don't operate on guesses or hype. They exist to bring predictable, sustainable liquidity from pension funds, insurance companies, family offices, banks, and sovereign wealth funds. This is capital measured in trillions, and it moves strategically, not impulsively. What's fascinating about ETFs is that they shift the focus from retail speculation to real adoption-driven demand. Previously, the crypto market thrived mostly on hype and chart patterns, with retail investors chasing short-term gains. But the new wave surrounding XRP is different. It's built on utility, infrastructure, and global payment systems. The XRP ledger now serves as a settlement layer for high-volume transactions. It's no longer just about price movements. It's about real-world use cases driving value. Take the MasterCard partnership, for example. Introducing RLUSD credit card settlements on the XRP ledger is more than just a headline. It's millions of real transactions moving through the system. Each transaction relies on XRP for settlement, which creates steady, predictable demand. And this is only the beginning. As more enterprises, financial institutions, and fintech companies integrate with Ripple's ecosystem, the demand for XRP grows mechanically. Unlike retail-driven price spikes, utility demand is continuous, high volume, and less influenced by market noise. Another essential factor is Ripple Prime, which provides hedge funds and institutions with direct gateways into digital assets. This infrastructure allows major investors to deploy capital efficiently, securely, and at scale. Hedge funds don't buy in small amounts. They allocate massive chunks, rebalancing constantly. Once they start routing real-world capital through XRP-enabled systems, liquidity flows will dramatically increase. This is not speculative, it's operational and measurable. At the same time, Ripple's expansion into custody services, stable coins, and corporate treasury solutions strengthens the foundation for XRP's institutional adoption. Each product and service is designed to integrate seamlessly with traditional financial systems while offering the speed, efficiency, and scalability that blockchain provides. This coordinated infrastructure development makes XRP unique in the crypto space. Many assets claim utility, but few have such comprehensive, ready-to-use solutions that already appeal to institutions. Global macroeconomic conditions also play a role in XRP's accelerating adoption. Around the world, financial systems are being pressured to become faster, more transparent, and fully digital. Corporations operating internationally need efficient cross-border payment rails, while central banks and governments are testing tokenized assets and digital currencies. Traditional banking systems are outdated, fragmented, and costly, creating a massive demand for solutions that work at scale. XRP, with its instant settlement capabilities and institutional-ready infrastructure, fits this need perfectly. Now, let's address timing. Many people see XRP's current price and assume the big opportunity has passed. That's a critical misunderstanding. Right now, the market is in a setup phase. The infrastructure is being deployed, partnerships are being formalized, and regulatory clarity is approaching. Once ETFs go live, institutions will begin deploying significant capital into XRP, creating a sustained wave of liquidity that retail traders alone cannot produce. The groundwork being laid today is what sets the stage for potentially exponential growth in adoption and value. Here's the bigger picture. XRP is evolving from a speculative asset to a core financial utility. Its integration with global payment networks, ETF readiness, and institutional tools means it's moving into the environment it was designed for. Unlike other cryptocurrencies that rely primarily on market hype, XRP's value is increasingly tied to real-world volume and institutional flows, making it a much more stable and strategically positioned asset for long-term investors. And this is exactly why early positioning matters. Most investors only notice after headlines appear or prices start moving. But if you understand what's happening now, the partnerships, the ETF momentum, the real-world adoption, you're seeing the story before the broader market catches on. This phase, where utility-driven demand begins to intersect with institutional liquidity, is the true game-changer for XRP. Now that we've discussed ETFs, institutional adoption, and real-world utility, it's time to focus on what truly sets XRP apart from almost every other digital asset: its design, speed, and structural advantages. XRP was created for a specific purpose: to serve as a high-speed, scalable settlement asset for global finance. Unlike other cryptocurrencies that rely heavily on speculation or mining, XRP's ledger is optimized for instant settlement, liquidity efficiency, and massive transaction volume. This makes it highly attractive to institutions and enterprises looking for reliable digital asset infrastructure. One of the main advantages of XRP is its speed. Traditional payment systems, especially cross-border transactions, can take days to settle. Banks rely on correspondent networks that are slow, fragmented, and expensive. XRP can settle transactions in seconds with minimal fees and across multiple jurisdictions. For corporations, financial institutions, and payment networks, this efficiency is game-changing. It's not just theoretical. Real transactions are already happening on the XRP ledger, proving it can operate at institutional scale. Another strength lies in liquidity management. XRP acts as a bridge currency that allows fast conversion between different fiat currencies or digital assets. For example, if a bank wants to settle to payments in multiple countries, XRP can facilitate the process without relying on multiple intermediaries. This reduces cost, speeds up operations, and increases reliability. That's why firms like MasterCard, WebBank, and Gemini are partnering with Ripple. It's a proven solution for real-world financial problems. Ripple has also built an institutional-grade ecosystem around XRP. From prime brokerage to custody solutions and stablecoins, Ripple is creating tools that allow hedge funds, banks, and global enterprises to access digital assets securely and efficiently. This is where XRP stands out. Other cryptocurrencies might have flashy price movements or retail hype, but XRP has been designed from the ground up to solve practical financial problems. It's the kind of asset that institutions can rely on without worrying about volatility in operations. Utility is another critical factor. Unlike purely speculative coins, XRP's demand comes from actual use. Each transaction through RLSD settlements, corporate treasury, or cross-border payments creates real quantifiable demand for XRP. This is a different type of pressure than what retail-driven speculation creates. Institutional demand is steady, predictable, and capable of supporting enormous transaction volumes without relying on social media trends or hype cycles. Timing also matters. Right now, XRP is sitting at a pivotal moment. Institutional infrastructure is being deployed, ETFs are being prepared, and global adoption is accelerating. While many investors focus on short-term price charts, those who understand the structural advantages and real-world utility of XRP see something much bigger: a foundational shift in global financial systems. This is the stage before explosive adoption, similar to the early days of other transformational tech companies, where momentum builds quietly until the broader market finally notices. Another key aspect is integration with traditional finance. Central banks, major banks, and large corporations are increasingly exploring tokenized assets and digital settlement networks. XRP already operates in this space and has demonstrated its ability to integrate seamlessly. The combination of speed, liquidity, and institutional infrastructure positions XRP to become a central player in the global movement toward digitized financial rails. This is why understanding XRP today isn't just about looking at the charts or price trends. It's about recognizing its role in a larger financial evolution. As more institutions begin to use XRP for settlements, liquidity corridors expand, and ETFs bring predictable capital inflows, the market dynamics will shift dramatically. XRP will no longer be primarily a speculative asset. It will be a core utility asset driving real-world financial activity. And here's the big takeaway: those who recognize XRP's structural advantage, institutional adoption, and practical utility now are the ones who will benefit the most as the system scales. Early believers are rewarded not just by price increases, but by being positioned in an asset that sits at the very center of the next generation of global finance. Now that we understand XRP's design, institutional adoption, and utility, let's take a step back and look at history. One of the most important lessons in investing is that early positioning in transformative technology often creates generational wealth. We see this pattern repeatedly. Companies like Google, Amazon, and Apple all started as opportunities that most people overlooked because the infrastructure was being quietly built before the market realized its potential. The same principles apply to XRP today. Let me share a personal story to illustrate this point. Right after high school, back in 2005, I met with an investment advisor who talked to me about Google pre-IPO. At the time, I thought the big gains were already gone. I assumed the opportunity had passed, but over the next 20 years, Google didn't just grow. It became one of the greatest wealth machines in modern investing. That experience taught me that the biggest opportunities often appear quiet at first. They look like steady strategic momentum that most people overlook until it's too late. This is exactly what we're seeing with XRP. The developments happening now, MasterCard partnerships, strategic institutional investments, ETF momentum, and the expansion of Ripple's infrastructure all point to a foundational shift. It's the calm before the storm, the quiet before mass adoption. Most investors focus only on price charts, volatility, or retail sentiment, but the real opportunity lies in understanding the system being built behind the scenes. Another key lesson from history is the importance of infrastructure over hype. Retail investors often chase price spikes, hoping to catch the next big move, but long-term wealth is rarely created that way. It's built by recognizing when a system is forming, understanding the mechanics of adoption, and positioning yourself strategically. XRP is exactly in that stage today. The infrastructure is being laid quietly, partnerships are being formalized, and institutions are aligning to move large volumes of capital. Those who recognize this phase now are the ones who will benefit most when adoption accelerates. We also see a shift from speculation-driven markets to utility-driven markets. In the early years of crypto, the narrative was mostly about charts, cycles, and social hype. Today, the narrative is changing. XRP is being integrated into real-world payment systems, global settlements, custody solutions, and financial tools used by major institutions. This utility-driven demand creates a new type of market dynamic. Unlike retail speculation, it is predictable, consistent, and scalable. As more enterprises and financial institutions adopt XRP, the demand will grow mechanically independent of short-term market noise. The macroeconomic environment also reinforces this. Financial systems worldwide are moving toward instant settlement, transparency, and digitization. Corporations and banks need faster, cheaper, and more reliable payment rails. Governments and central banks are testing tokenized assets and digital currencies. XRP is already positioned to serve this demand. Institutions don't rely on guesswork. They move strategically. That's why partnerships and investments are happening now before mainstream attention drives prices higher. So, the key takeaway is simple. XRP represents a historical level opportunity. Like Google before its IPO, XRP is quietly building the foundation for massive adoption. Early believers are rewarded not only by price movements, but by access to an asset embedded in global financial infrastructure. This is a rare stage where positioning matters more than timing or social sentiment. The story is unfolding in real time, and those who connect the dots now are likely to reap significant rewards in the years to come. We've discussed institutional investments, strategic partnerships, ETF momentum, XRP's design and utility, and historical lessons. What's happening now is the convergence of all these factors, and this is why the upcoming phase for XRP could be unprecedented in crypto history. Everything is aligning: real-world adoption, infrastructure deployment, institutional liquidity, regulatory clarity, and utility-driven demand. First, let's talk about convergence in action. Ripple is expanding across multiple verticals simultaneously. From MasterCard's RLUSD settlements to prime brokerage tools for hedge funds to custody solutions and stablecoin integrations, each of these developments strengthens the ecosystem, reinforces adoption, and creates predictable demand for XRP. This is not random. It's a coordinated effort to build a financial backbone for global transactions. The more integrated these systems become, the more XRP becomes indispensable for moving value efficiently and securely. Add to this the ETF momentum. Firms like Franklin Templeton and Canary Capital are preparing XRP ETF structures. ETFs are specifically designed to bring massive institutional money into the market in a regulated, predictable way. This means that when the ETFs launch, capital will flow consistently independent of market hype or retail speculation. Combined with Ripple's partnerships and real-world adoption, ETFs provide the liquidity backbone necessary for sustained growth. We also need to consider the global macro trends. Financial systems are under pressure worldwide to digitize, reduce friction, and improve transparency. Traditional systems can't keep up with cross-border demand, regulatory requirements, and instant settlement expectations. XRP is already operating in this environment. It can handle high-volume cross-border settlements in seconds, providing the speed, efficiency, and scalability that global institutions need. In essence, XRP sits at the intersection of technology, finance, and regulation, making it one of the most strategically positioned assets in crypto today. Now, why does this matter for investors? Because XRP is entering a phase where utility-driven demand collides with institutional liquidity. This is when exponential growth potential emerges. Utility-driven demand is steady, measurable, and tied directly to real-world usage. Institutional liquidity is large, strategic, and persistent. When these forces combine, price movements are no longer driven by short-term retail sentiment. They're driven by actual adoption and financial activity. XRP's trajectory is fundamentally different from coins reliant solely on hype. Let's not forget the lessons from history. Just like Google or Amazon in their early days, XRP's quiet foundation building stage is where early believers get positioned for life-changing results. Most people will only notice once mainstream attention hits and prices surge, but those who understand the ecosystem now, who see the partnerships, ETFs, institutional onboarding, and real-world usage, are the ones who gain the maximum advantage. Timing in this case is about recognizing momentum before it becomes obvious to everyone.